The difference between trading and investing typically comes down to the duration of time that you're intending to hold a position for. However, there's no set time difference between the two, and different people will give different definitions. Now, I tend to think of a trade as a market transaction where you intend to hold the position for less than a month. If you're initially planning to hold for longer than a month, it will usually fall into the investment time horizon instead. So essentially, trading is the buying and selling of assets to make a profit in the short term. A trader's focus is on short-term price movements, and they'll often hold a position for just a number of hours, days, or weeks. Whereas on the other hand, investing is having a position with the intention of holding for as long as needed for the asset to fulfill its purpose. In some cases, that purpose might be asset value growth or decline in some cases. In others, it might be to diversify a portfolio. For shares in companies, equities, some investors do it to receive a dividend payment or even to gain more control over the company. Now, in general, all of this means holding for a longer period of time, sometimes even decades, like pension funds, for example. They'll hold for a very long time. So investors are focused on the long-term performance of the assets and are less concerned with the short-term, day-to-day price fluctuations. We can also make a definition based on intentions. Typically, a trader is taking advantage of what they see as a short-term opportunity in the way the asset is priced or how the markets are behaving, whereas an investor is making a judgment based on the value or potential of the asset itself. Of course, as I mentioned before, other people may define these differently, and not everyone who defines themselves as a trader or investor will fit neatly into one box or the other. Another key difference between the two is the level of risk. Trading is generally seen as higher risk due to the exposure to short-term price fluctuations, which tend to be a bit more unpredictable and can be volatile, whereas investing is generally more stable, but usually with lower comparative potential returns. Now, although both will involve psychological challenges, it's usually the case that trading has much more of a mental game involved, as traders are influenced by those short-term price movements, and this can cause traders to take inappropriate actions that lead them to poor performance. Investors can also go through similar psychological challenges, but in general they tend to be less damaging to their performance. However, it's a common misconception that you have to be one or the other. People online like to label people as being either traders or investors, but many successful market participants just do a bit of both. In fact, if you're mainly focused on trading for now, as you grow your capital, it can be a really good idea to start moving some of your money into longer term investments that you're not so actively managing, and to think of your trading account as being part of the riskier portion of your overall portfolio. Now, if you want to know how I trade and what I've learned from over 20 years in the markets, check out the link in the description box below and hit the thumbs up button if you found this video helpful. Thanks for watching.